Hey, what's up everybody? First off, this is not a spearfishing or fishing video. This video is about how spearfishing, fishing, diving, and to some extent martial arts has shaped one aspect of our investment strategy. Okay, sounds boring, but you gotta think of it this way. To do what we need to do, we need to earn money. So this one section, one part of how we invest is how we pay for our lifestyle. So, this is not financial advice. We're just explaining to you what we do. So, see all those little fish way out there? I mean, those are the fish we're targeting. And for the investment side of it, those are dollars. So, we need to accumulate them on a regular and consistent basis. We are go fishing and spearfishing for protein. If we don't catch anything, if we're not consistent, we don't have anything to eat. So we're looking at this aspect of our investment strategy the same way. Don't get us wrong, we have other assets allocated to growth and speculation, but this is the consistent. I'm going out for my dinner dive. I need to catch some king coles and I need to make fish nuggets. That's how we are looking at this. So the money here we get from our side hustle. So my wife, my daughter, and I, we sell stuff on Etsy, on eBay, and some days we make $1.35. Some days we make more. But we record each deposit into our account, and as it comes in, we purchase a specific stock, which is a ETF that pays monthly dividends. We look at it as basically free money. We take 100% of those proceeds and invest it. And the dividends we reinvest. So let's take a closer look at the one ETF that we're using right now. We're currently investing in the Global X Super Dividend US ETF, symbol DIV. We used to invest in GLDI, the gold covered call ETF. But the whole point of this is it kind of doesn't matter. It's whatever interests you. So DIV basically pays out a little less than 0.5% per month. So we wanted something that pays out monthly dividends because we wanted that recurring income. So for right now, since we're working, we are reinvesting 100% of all the dividend proceeds and plus the side hustle money. So the key thing is, just like in your diving, when you're looking for a specific fish, we constantly evaluate the underlying stock / ETF that we're invested in. So we model it in spreadsheets and we make adjustments as needed. Like we said, it doesn't matter. It's whatever is going to give us the best return, whatever is going to be the most consistent. So it's like when you drop on this fish pile and you see this fish you really want to get, a really nice trophy fish in the back, but you got to pick up dinner, and if you miss it, you get nothing. So we're going for the consistent shot rather than get that trophy fish hiding in the back. We're taking that king cole right in the front and going home with fish nuggets. So let's take a detailed look at how we model this out in spreadsheets. So now let's get into the numbers, the nuts and bolts of how all this works. So we're going to compare Apple versus DIV. The Global X Super Dividend ETF is a ETF of dividend stocks, US-based dividend stocks that pays out a monthly dividend. So why are we comparing Apple versus DIV? The reason we're comparing the two is looking at a growth FANG tech stock versus something that's going to pay out monthly dividends. So let's look back over a 1-year period starting in November 1st, 2020, all the way up to November 1st of this year, 2021. We're going to assume that we're going to start with $1,000 of investment. So on November 1, 2020, we would have bought $1,000 worth of Apple stock, which would have given us 9.19 shares. If we did the same thing for Div, it would have given us 65.49 shares. The key thing we're going to assume is, just like fishing. When we catch all these little fish for dinner, when we go out, we're going to use our side hustle money, and we're going to assume that our side hustle money is $100 a month. It's more than that, but we'll just use $100. So with this $100 of quote-unquote free money, we're going to reinvest it. We're going to buy more shares. So every month, we're going to put it back into our stock. So if we did it with Apple, we get 0.94 shares back in November. What's so good about why all this works now is that's why I hate all these guys who are, against this payment for order flow, against Robinhood and all this other stuff, because they basically created an environment for us, the individual investor who's investing small amounts of money, to be able to do it cost effectively. If we had to pay the old commissions, this would not work. The other thing that is available now that we didn't have, a decade ago, is the ability to buy fractional shares. So we don't have to buy a full share of Apple. We can buy $100 worth of Apple. So we're going to invest our side hustle money, $100, every month. We're also going to take the dividends that we get and reinvest those as well. That's called dividend reinvestment. So it's called a DRIP plan, dividend reinvestment plan. So the cool thing about these monthly payout ETFs is you'll get a dividend every month. So we're going to take that and reinvest it. So every month we get a little over 6 more shares of DIV. And you can see how it goes here for Apple. Now at the end of the year, we would see the value of our stock based on the current price. Of course, we're not in November yet, but just assume it was our last closing price. The last closing price for Apple as of 10/22 was $148.69. Div was $20.33. So our value of our Apple stock would be $2,743.96. Our Div would be $2,764.10. So we're seeing a little bit better return for Div over Apple. Assuming we put in $100 a month over a year, our total cash investment for the year would be $2,200. But again, this is our side hustle money. Money that we get turning in cans, selling on eBay, selling on Etsy. So the way to look at it is it's basically free money. But anyway, here's our total investment, $2,200. That would have meant we made a profit of $543.96 for a 24.73% return for Apple. For Div, we would have made $564.10 with a 25.64%. The point is, it kind of doesn't really matter what you invest in. For example, you could go to set it and forget it type services like Acorn or Wealthfront, but this is kind of more fun. You don't have to pay their fees, and you can pick what interests you. So the reason why we're doing Div is we're trying to build up our monthly recurring income for the time where we're totally living off grid. So we would have a guaranteed income coming in every month because of the monthly dividends. Now, let's look at it over a 5-year period, and it's hard to predict where the prices of everything are going to go, but just assuming that it stays flat. At the end of 5 years, if Apple stays where it is, you'd have $7,333.21 of Apple, worth of Apple. But Div, you'd have $8,569.84. This is misleading because Div just pretty much trades flat, while Apple is, a growth stock. So this number will hopefully be a lot more after a 5-year period. So let me show you a couple of the services that we use that are free, where you can get these numbers to do your own analysis. I really like to go to the NASDAQ.com website to get historical data. So you can just punch in the symbol that you want, and it will give you the daily price action for Apple. And you can go back multiple years. You can download the data to a CSV so you can import it in your spreadsheet. I also like to use the NASDAQ site to track the dividend payout. Unfortunately, you can't download this, but you can just cut and paste it off the screen. Just highlight it right here. Cut and paste it into Excel. But you can see the dividend payout rates for Div. Notice it's been going down though. When it first started, it was around 14 cents, and now it's just under 10 cents. For charting, we use TradingView. It's a free service, but we subscribe to it. Really like this. We really like this charting software. So that's the nuts and bolts of what we do with our side hustle money. But when you think about it, if you look at what we did or what we're doing, we put in $1,000, and after a year, we end up with $2,700. That's a deal. Okay, yeah, I know. It's because most of it is the side hustle money that you make. You're pocketing your $100, but that's everything. We don't need to spend that money. So if you look at it as free, you just sock it away, and that money is going to bring you returns day after day, month after month, year after year. But the key is, if we look at it for our daughter, who's now 25, so she's been investing in the market consistently for much of her adult life. And by the time she's our age, in her 60s, she'll just be totally set. So thanks for watching. I know it's kind of boring, but this is an important part of our off-grid journey. Please like and subscribe. See you at the next video. And aloha.